How will the U.S. election shape markets? Here to discuss that is Jeremy Siegel. He's professor emeritus of finance at the University of Pennsylvania's Wharton School of Business and chief economist at Wisdom Tree. And I'm Lisa Bernhard with Reuters. Professor Siegel, are markets signaling or pointing to a certain election outcome?
It's hard to interpret. I would say that the markets are expecting at this point a Trump victory, and Trump is viewed generally as more favorable to equity. And as a result of that, perhaps some of this pre-election rally is related to Trump and a Republican victory, which is also viewed as more pro-capital than a Democratic victory.
Can you look at a specific policy from each candidate that you think would have the most impact on markets?
Well, you're saying a policy that is likely to be enacted. And that's those are often two different things. I mean, tax legislation has to come from the House of Representatives. It doesn't come from the president. President cannot have that. And as you know, all the Trump tax cuts expire on December 31st of 2025. Now, even if Trump becomes president, if the House of Representatives, for instance, is Democratic, and there's a lot of experts who think that very well could happen, he has no power by himself to extend those tax cuts. So as far as that's concerned, now, that being said, both parties are going to increase, are promising tax cuts that will increase the deficit. Now, Harris promises some tax increases, but they're nowhere near as enough to offset her programs for a deficit. Nonetheless, there is more deficit increase under a Trump plan. Tariffs are, of course, he has threatened a 20% tariff, but he says, I'm using that as a bargaining tool. 20% tariff would cause a lot of macroeconomic changes, and that's something that a president can do pretty much unilaterally without congressional approval. That would cause more inflation. It would also cause a rising dollar. If you want to know the truth, if I compare this with past years, I would say that both of these platforms are disappointing in terms of their depth of economic analysis. It's almost like who can give away more tax cuts without really talking about the deficit. The analysis that the Republicans have, or that Trump has on the tariffs is way too favorable, in my opinion. And if he does do a general tariff of the size he talks about, I think there would be retaliation, and that would really start a trade war, perhaps.
Let's go back to that national debt, right? More than $35 trillion. How alarming is that to you? And explain to the average American the ramifications of that, if that is not dealt with.
Well, the ramifications of the national debt are that if that deficit is worsened significantly, that will mean that interest rates will rise. And on particularly long-term bonds, and that if that goes out of control, that higher interest rate will hurt the homeowners new homeowners in terms of getting mortgages. Mortgages will become more expensive. financing for capital be more expensive. And that ultimately is what puts pressure on politicians to do something about the deficit. I do not see that coming soon, although I think that if all the tax cuts, if the Republicans sweep and do all the tax cuts that that Trump has been talking about, with no increases in taxes except for tariffs, which has its danger, that would cause more of a bond market, negative bond market reaction in the bond market. That is one reason why Congress is important, because if there's a split in Congress between the House and the Senate, then either president, whoever is elected, cannot get theirs through without a lot of negotiation. And that negotiation will obviously take into account what will happen into the bond market. So, I mean, if you do something crazy, the bond market will react and tell you, and you will pay the political consequences of that. I say that to either side, either the Republican or the Democratic side.